And we're live. Thank you very much for joining, everyone. A little bit late, sorry for that. First time I've done a live stream in, I don't know, probably ever since October of last year. So it's been a little while. I'm going to be joining I'm going to be joined by Matt, the mortgage guy. You guys may be following him on YouTube as well. He has 15,000 subscribers, really knowledgeable about the mortgage or the lending market. And he's been a lender for a long, long time in the Sacramento area. So hopefully when he gets it on here, he'll be joining us today to kind of go over this craziness in our housing market. I wanted to make a live video today to answer your guys' questions and also to share, according to the Mortgage News Daily today, average rates 6.13%. Absolutely insane. And by the way, those are for people with excellent credit. So absolutely insane. We're going to be seeing a big shift in our housing market potentially if rates continue to increase or if rates sustain at these high levels here. So let me give you some stats here. Mortgage rates surged today, of course, is 6.13%. That's a 58 basis point increase in the last 2 days. In other words, rates have increased on average by 0.58 percentage points in the last 2 days alone, which is absolutely insane. Rates are now higher by 284 basis points year to date. In other words, rates are 2.84 percentage points higher this right now compared to January of this year. Absolutely insane. It's absolutely crazy. We have already 200 people live already. Thank you so much for joining us. Really appreciate it, guys. And hopefully we'll get Matt here on the live stream very, very soon. Let me just check in with him. I don't know. All right. I definitely want to answer your guys' questions. Thanks so much for joining me on this kind of last minute live stream I'm doing here at 2 o'clock in the middle of the day. Let me kind of get to your guys' questions here. Christina, how are you doing? If Christina's still here, how are you doing? Christina has a great YouTube channel, like over on 120,000 subscribers. Good content based in Louisiana. Hello, Christina. Yeah, hard to say, Janet. Thanks for joining us. Where the housing market's going to burn. Yeah, prices still stuck pretty much everywhere. We haven't really seen a big decrease in home prices just yet. But we'll have to see if that happens though, because mortgage rates increasing almost 3 percentage points this year alone, which is basically unheard of. The worst rates we've seen, or the biggest increase we've seen since probably past 1979 probably. Yep, absolutely, Mike. That's what I saw today. That's why I want to make this a live stream, because I want to make a video about it, but my jaw just dropped when I saw 6.18% today. I mean, look at rates. Yesterday were 5.85%. I thought that was absolutely insane. So I made a separate video regarding that. And on June 9th, so 2 days ago, rates were at 5.55%. Now 6.13%. Again, people with excellent credit, right? So rates could be higher if you don't have excellent credit. And right now, at the time of this video, it's live. We're at 3.362% on the 10-year U.S. Treasury, which is absolutely insane. That's why mortgage rates have been increasing so much. Mike T, thanks for the thumbs up. Appreciate that. Eddie, how you doing? What's up? Hope you and your son. Yep, definitely. It's nice and cool today in Sacramento. I think it's like 85 degrees, but yesterday was, or 2 days ago, was around 100 degrees. So yeah. Has the party started yet? Yeah, I was late. Sorry. Tony, realtors are also saying rates will be back at 3% next year. I mean, the reality is no one knows what the mortgage rates are going to be like. It just depends on what really the market's going to be bearing, right? And inflation really, I'm really curious what the Fed's going to be doing on Wednesday. Are they going to be increasing? Matt's restarting his computer. He'll get on eventually. So Matt is a loan officer in Sacramento. So I really want to get his take on this giant increase in mortgage rates, how that's going to be impacting our housing market. Obviously, I'm not a loan officer. But yeah, I don't know about 3%. I mean, gosh, that'd be a big turnaround, wouldn't it? But I'm really curious what the Fed's going to be what we're going to be announcing on Wednesday. So 2 days from now. Are they going to be increasing rates by 75 basis points? 50 basis points was the original plan. Now it's 75, maybe, potentially more. We'll have to see. Well, if they pivot, well, that's why mortgage rates have been increasing so much, because of this, scary inflation report, which caused turmoil in the housing market here, or the mortgage market. You had a loan officer, or Jeff, you said a loan officer tell me that rates will be 3 to 4% in October. I guess he anticipates that inflation is transitory. I don't know. Seems kind of weird. We'll see. I actually just read a realtor.com updated housing market forecast, and they were saying that we're going to see rates up to 5.5% by year end. We're already at 6.18%. However, though, I mean, this is mortgage rates can turn around very, very quickly. So if the Fed doesn't pivot, mortgage rates can go down. We'll have to see what happens on Wednesday. Matt looks like he's back. Okay, let me add Matt to the stream here. Matt, are you there?
Yes, sir. How's it going?
Thank you so much for joining us. Only 9 minutes late.
You know what's crazy is I recorded on StreamYard earlier today. I still got to fix my camera because it looks like it's fuzzy on my end. But you're using the same streaming that I use, StreamYard, and
yep.
I couldn't figure it out. I tried 1,000 different things, and I did the non-tech guys like me only answer, where I just restarted my whole computer and logged back in. And so here I am.
Well, thanks for joining us. I was telling everyone that you have a YouTube channel, 15,000 subs. That's amazing, Matt. You really climbed greatly the past 6 months, probably, right?
Yeah, it's probably double the last 6 months, and I think I account it to I'm just putting out information based on business I'm doing. I'm not just creating content for the sake of creating content. I'm sharing with people real life stories. This is happening. This is what's going into the decision-making process for people buying homes, and different scenarios in mortgage. Some of the videos I make, truth be told, don't go viral because I'm talking about restricted stock units and other type of things that might not be, something that's widely searched, right, by millions of people. Yeah. But to the specific people that it reaches, hopefully it helps. And so I think I attest, some of that. What the heck is going on with my camera settings? Let's try some things here. See if we can get.
Oh, there you go. That's way better. Oh, no.
Let's see.
You'll get there.
Yeah.
While you're doing that, I'll answer some questions.
Tell me when I look pretty.
There you go. You always look pretty, Matt.
Today, I don't look so pretty as a mortgage guy. I can tell you that much.
Well, for everyone who's joining in, gosh, we already have 423 people already. It's absolutely crazy. I haven't done a live stream probably since October of last year. We had a kid 3 months ago, and and we moved and we remodeled. We did lots. Life's been pretty crazy. But I was explaining to the viewers that you were a loan officer in Sacramento. You have a YouTube channel, 15,000 subs. You're the Matt, the mortgage guy on YouTube. But I really wanted to get your take. And for the viewers, I reached out to Matt 2 hours ago and said, hey, I'm thinking about doing a live stream. Hey, do you want to join me? And I'm sure you're super busy, so I really appreciate you just jumping on such short notice.
Yeah, I'm happy to. And I think too, 400 people joining, people want to know what's going on in real estate. They want to know what's going on with mortgage. It's volatile right now. Things are changing fast in the real estate market, with mortgage rates and whatnot. And so I'm always glad to jump on. I actually go live at 3 p.m. Pacific Standard Time on my channel. Quick plug for Matt, the mortgage guy on YouTube. So right after we do this, I'm going to go live. I'm going to do Q&A, answer any questions folks have. But I think it's good for us to get in on here and talk, and kind of the whole mission behind your channel, my channel, colleagues that I have across real estate and mortgage is, putting out good information. There's plenty of bad stuff out there. There's plenty of stuff that's either fear, uncertainty, and doubt, and it's, the sky is falling, everything's crashing. Or on the other side, it's all sunshine and rainbows, and real estate's going to go up 25% every year. I think me and you both lie somewhere in the middle, where reality is, where it's not always sunshine and rainbows, but it's also not, falling apart at the seams. And we're going to give you boots on the ground, real life, here's what's going on. Every market's different. Here's what you want to do to prepare yourself, and all the other things that I think is of true value to people. And, the proof is in the pudding. 60,000 people have subscribed to you since starting your channel. you've got hundreds of people joining live. They want to hear from you because they know that you're going to give it to them straight.
I appreciate that, Matt. And I think, yeah, you have the same mindset I do. Just giving people the data, straight from the sources and boots on the ground, rather than like, fear mongering and, just having some sort of narrative about the housing crash is going to happen. Been doing that for like 2 years or whatever. So not to say like there's like some challenges in our housing market right now, to say the least. I've been talking about that quite a bit on my channel with all these things I'm seeing right now. That's really telling me that there's going to be a housing market slowdown, or the housing market is currently slowing down. But holy guacamole, for rates to reach 6.18%. And that I was just telling people, by my dumb math, that's a 58 basis point increase in 2 days, according to the Mortgage News Daily, which is the website I use, which is obviously a public website that anyone can go onto and check out. But, can you tell us like what the heck is going on right now with the rates increasing so much? And I kind of touched on that at the beginning of this video here, but you're the mortgage and rate expert here. So then we can answer some questions here too, but kind of want to get your take.
For sure. Yeah. And I think that Mortgage News Daily is a great resource. It's something that I actually point people to as well. Just for kind of a broad overview or a guess, it's a survey of lenders across the country. So you might get a little higher, you might get a little lower, but in general, 30-year fixed conventional money, like this is about where it's at. And you're right, their daily, report 5.55 last Thursday. Friday was an ugly day, and 30 basis points on rate, not 30 basis points as in 30 basis points. And I won't get into too much minutia, but like 30 basis points worse on rate. And then another 33 today. Those are two back-to-back, pretty bad days as far as movement.
Pretty bad. Isn't that absolutely horrible? That's really bad.
Yeah. Yeah. And so, I think a video I just recorded that will be live on my channel tomorrow talked about like why we've seen those 2 bad days, in my opinion. And anybody who was watching inflation and saw the reports that come out last week, the Fed, all their tightening of monetary policy that has caused interest rates to go up. The hope was that they're doing all this to curb demand and to curb inflation. And so when we get an inflation reading that comes in at 8.6, when the prior one was 8.3, we're headed in the wrong direction. And I think that was a little bit of a shock, because what the mortgage-backed security market anticipates by this move that we've seen is that the Fed is going to have to try harder, right? For lack of a better term, with month over month inflation of 1%, that's what the reading was last week. Which if you extrapolate that over 12 months, that's 12% in a year. That's going the wrong way. We're trying to get from 8% down to 2-ish. And if we're going 8.3 to 8.6, we're headed in the wrong direction. A lot of folks who might have said in June, which by the way, this week the Fed is meeting, and on Wednesday we'll get, their direction, their Fed rate hike move. And more importantly, we'll get to hear what they say based on talking about what they're going to do in the future.
I can't wait for that.
Yeah. So folks anticipate 50 basis points on this meeting, 50 basis points in July. And now they're starting to say, well, they might have to do more, or they might have to talk about how September is another 50 basis point guarantee. But that Fed funds rate, while not directly tied to 30-year mortgage rates, it has an effect, right? They're making borrowing money more expensive. So when they do that and the stock market starts to fall, it's because these companies use debt and they use leverage. If that debt is more expensive, it hurts companies, therefore the stock market. And, it's going to affect the cost of capital when it comes to auto loans, when it comes to home equity lines of credit, everything, right? And it does, although not a direct correlation, impact mortgage rates. If anybody was paying attention, Jerome Powell specifically talked about housing and said, we know housing is out of control. We know 20% year-over-year home price appreciation isn't sustainable. By throttling down the demand side, which we'll do by increasing rates, we'll start to get that under control. And so that's part of the mandate. It's not on accident, right? They're trying to do that. What is going to be interesting to see, and we'll be honest with folks about, is if they overcorrect, they do too much, and all of a sudden we've got a 30-year fixed rate mortgage, home prices, at highest levels we've seen, I guess ever, right? with these rates, is it going to hurt affordability so much that we see, home price depreciation or, slight correction? I'll be completely transparent, Jason. I was of the mindset probably up until very recently of there's so much demand. Even if we shed off 30-40% demand, we're still going to be in a level market where home prices, there's too much demand. We're too much this way for it to go to where we're seeing home price depreciation. I don't know. Maybe we see 5-10% correction over the next 12 to 24 months because like it's
not sustainable.
And it's affecting affordability, right? Like I've got buyers every single, like this is another example. These 2 days that are this bad, I'm basically going to have a pipeline of, every week I check and it's somewhere between 100 to 130 pre-approved buyers. 15 to 20% of those are barely approved for what would make it worthwhile for them to buy a house, right?
Sure.
If you cut their pre-approval by 10 or 15% on the purchase price side, no thanks. Like that's just not even a neighborhood I'm willing to live in. So 10 or 15% of them are gone. Another portion of them might be turned off and say, you know what, like as much as I am in a position to buy and think I want to buy, like I might hold off. Whether that's right or wrong, it is what it is. Like that demand side, which is pre-approvals actively looking for houses, is going to come down by 30%. Just because, rates over 2 days shifted enough, 555 to 618, to where on the median priced home in Sacramento, that's probably a few $100s a month, right? If you're looking at it and it's 3,200 and 2 days later, it's 3,600 for the same purchase price.
Yeah, it's like I'm out.
Right.
Yeah. I actually have some numbers to share regarding that. Like not for Sacramento, but the median sold price in the US is around $400,000. So at rates 1 year ago, we're at 3.29%. This is according to the Mortgage News Daily. So a $400,000 house 1 year ago, your payment would be $1,400 per month. Now that same $400,000 house at the current rate of 1.8, isn't it? 1.8%. Sorry. Just adjusting this, would be $1,955 per month. So we went from $1,400 per month to $1,955. So basically $550 more per month to buy that same house 1 year ago compared to now. And so a lot of people are going, well, I'm not going to pay that. I'm out. I'm going to be waiting this out.
Yeah. And the crazy part of that is in a lot of markets, if it went up 20%, that $400,000 house is now $480,000. So not only do you recalibrate that to probably be, $2,050, but then you also say, oh, property taxes are a little bit higher because it's 20%. Yep. And so, $1,400 turns to $2,100 real quick. And I'm a math guy. It's a 50% increase. 50% increase in your payment in 1 year is gonna do a lot to change the landscape of who's qualified, who's not, who's buying, who's not. And so
for sure,
it's an interesting market to say the least.
To say the least, yeah. So that the housing payment I'm referring to is only principal and interest only. It doesn't include property taxes, insurance, et cetera. But you're right. I mean, 1 year ago, home prices were about 15% less than they are now. You include property taxes, and the differential there is much greater. And then also, I'm sure you see people too, that maybe now they're no longer qualified for what they're looking to buy now, right? Home prices have increased, mortgage rates have increased greatly. And so they're no longer qualified for the same house from 1 year ago, let alone, want to move up or something.
Yes, sir.
Let's get to some questions. Really appreciate that, Matt. So what do you, before we do that, I'm really curious. Do you think the Fed's going to be increasing rates by 50 basis points or 75 on Wednesday?
Man,
I won't put you on the spot or anything.
Well, yeah. I mean, my guess is as good as anybody else's. We were pretty certain that it was going to be 50 in this June meeting and 50 in July. I wouldn't be surprised if they did 75. A lot of people think that there needs to be a little bit of a shock. And, it's funny, like Jerome Powell and the Fed, they'll talk a big game, and then their actions don't necessarily align with, like, we realize we need to take some drastic action if we want to get inflation under control. Maybe this is the meeting they finally say, you know what, we're going to do it. We're going to see what happens. We're going to slap them with a 75 basis point hike and see how the market reacts. I wouldn't be surprised. It's good. Change is exciting. Let's hope we get a 75 basis point hike.
I agree, man. I mean, reporting on the housing market ever since this pandemic started, really from a national level, it was the same story over and over again. Record high home prices, record low inventory, record low mortgage rates. Now we have like something really exciting to talk about. And like, I feel so bad for the people who, are been priced out of this housing market. It's been a completely unfair housing market for home buyers, especially first-time home buyers, for years now. And so I would love to have some more normalcy in our housing market for those people who really want to realize their dream of buying a house to actually become a reality, because it's been so unfair and so one-sided that I'm frankly sick of it. I would like to see some more normalcy, more options for people out there. I mean, this last spring in Sacramento, in spring of, I should say last year, I've never had a market where I had to call the listing agent within a couple hours or so of a house hitting the market. Otherwise, because of COVID, they had like half an hour increments of showing requests. And if I didn't do that, then they'd be completely booked. You couldn't even go to the house to show it. Whereas back in the day before COVID, anyone just go, you show up. If it's a vacant house, you just wait in line. No, but last spring you had to do appointments and everything. And so if I wasn't fast enough, we weren't even able to see the house, let alone like place an offer on the house. It was just so nuts and not sustainable.
Yeah. And you're right. It's like, it's become this crazy dynamic where, some folks can't compete, and, I have to live it over and over and over again. We're a relationship-based business where we're pre-approving these clients, we're assisting clients and educating these clients. We're rooting for them, and we're on their team. And to have, folks find a house they love, put in an offer they think is fair, and get kind of turned down over and over again, it is deflating. And when that's happening, I was telling a part of my team, I hope it gets easier, of the 15, 20 people putting in offers every weekend, instead of only getting 2 or 3 accepted. Like, it would be nice if, half of these offers were accepted, which I fully expect. I expect it to get a little bit easier for those home buyers who are, able to stay in the game, able to keep at it. And I understand it's not everybody, right? Like I said earlier, 15, 20% of the clients I have pre-approved are just going to be out of the game. And I feel for them, but it's kind of the truth of the reality.
No, it's definitely true. I'm curious. Mike D says here, I wonder if he likes the Beastie Boys. Anyone likes Beastie Boys? Mike D.
Mike D.
I don't know. That's a coincidence or what? I don't know. And so, he said I locked and shot my rate at basically at 5%, but still haven't picked anything out yet. I got a month and a half before it expires. Something else, I don't know if it was Mike or someone else who mentioned, I did a a premiere for my videos I just posted at 12 p.m. today. And I never heard of a loan program where you can lock in your rate before getting your offer accepted. You see that for new home builds where you can do a extended rate lock. I called you about that, several months ago. But for people buying an existing house, being able to lock in your rate today before you even get an offer accepted, is that something you see?
Yeah, it's not.
I've never heard of this market.
It's not super common because it's kind of got the same drawbacks as the extended lock periods, 120 day, 180 days, where, like, sure, I can lock you on 180 days, except for the rate is going to be much higher than it would be on a 30-day lock. So you kind of pay a premium for it. The builders make it extra nasty because they actually charge you up front, where it's like a sunk cost where you get charged for it, versus I'll lock somebody for 180 days and it's only really like it's built in. You pay when you close. It's not like you pay up front. But for this specific,
so for new builders, you're saying you pay that fee up front?
Yeah, a lot of them too. Like I've been having a lot of discussions. You know what a really cool stat I found recently is that 73% of people who are buying a new build do the loan with an outside lender. As much as we like to believe that outside or that inside lender holds control and they can really like strong arm people into using their lender,
Mm-hmm.
I know it as fact that like more often than not, a broker on the outside is gonna be able to get you a better deal. So you should be using an outside lender, but
Yeah.
like the actual stats show that 73% of people use an outside lender, which makes me happy because, you know, the consumer has the right to use any lender they want. But for this specific question, I'd love to give Mike D some specific advice. Thanks for joining, Mike D. And don't settle for any old house just because you're locked in at that rate. But I can tell you, your rate is probably a full percent lower than the market rate. That 4.975, depending on if there's any points connected to it, and a myriad of different things to do with credit score and down payment. Like, you've got a really great rate locked in. I would never advise anybody to just go out and buy a house just because, you know, you've got a great rate. But if you can find something within that time frame, which is probably like find it the next 15 days, because then you have 30 days to execute on that before that lock expires. It's great. And, you know, for anybody thinking about lock and shop for the future, it's tough because let's say, for example purposes, today's rate is 6%. You know, we've seen they've gone up quite a bit. If you say, hey, I want to do some 90-day lock and shop, maybe the rate's 6.375, but you're locked in, you feel good. Like, it's not going to be 7% if you find a house 2 months from now. I don't think it's going to be 7%. I don't think rates are going to go up that much. And so, you know, I don't know if I necessarily recommend that to folks. You know, you find a house next week, you lock it in, you get 6%, and you're on your way. Not enough lenders have like super competitive lock and shop, as you would imagine, right? They've got to gauge that risk for giving you that, what is essentially like an extended lock. And so they're gonna bake that in. You're not necessarily going to, you know, get today's market rate and the flexibility of going and finding something, getting a contract and closing it within 90 days.
For sure. I mean, you have to pay a premium in order to have some sort of like flexibility in that regard. One would assume, right?
Right.
And I think I might have, let's see, does Mortgage News Daily, does it update throughout the day? Because I thought it was, people are saying it's 6.18%, and I had it at 6.13. So yeah, I guess it updated. I just saw it on the website there. Mortgage News Daily is calling for 6.18%. I'll have to update my thumbnail now.
Yeah, it's even more dramatic.
Thanks for sharing, John. Yeah, and Ozzy, everyone's pointed out, okay, Jason's a moron. Everyone understands. Yeah. Any hope for the Phoenix area? You know, I don't know. I know Phoenix has increased home prices there by over like 30% compared to 1 year ago. And, you know, for any area, it just depends on supply and demand. Some areas, I don't know if you saw this map, but Boise, Idaho, home prices have increased about 70% pre-COVID. Absolutely insane. But they had increase in, I think it's either new listings or housing supply by 170%. So it's absolutely insane. But they're still even though with that huge increase, they're still below last year's levels for, or maybe 2019's levels for housing supply. So every housing market's different. I would say any hope just depends on this balance of supply and demand. It certainly seems like if these rates sustain at these levels, one would assume that this is going to cause a really big pullback in demand, which even if we don't see a big increase in new listings, we're going to still see an increase of housing supply because houses are not going to sell as fast as they once did 1 year ago. 7%. We'll have to see. It seems like the market right now is pricing in this 75 basis point increase, and then maybe another 75 in their next meeting. So, you know, we'll have to see what the Fed's going to be saying on Wednesday. I cannot wait to see that.
Yeah, I mean, I think, what's the 10-year at? Like 3.37. I don't think we see 7% by the end of the week. Like, you hardly ever see. I can look back.
Increase.
Yeah, I mean, I can look back for like 6 months, and really, like last August was like the bottom. The 30-year fixed average was 2.6, 2.7, somewhere in there. And it's incrementally gone up, you know, over time. But some of the most drastic moves, let me see, back in March, we've got 3.96 to 4.22. That was like a 2-day period. I'm trying to look at.
Are you looking at the 10-year?
No, I'm looking at the chart that's on Mortgage News Daily.
For a 30-year fix or what?
Yeah, and trying to
I mean,
see.
the rates right now are basically comparable, I think, to like 2008, I believe, right? But like
Yeah,
for like increases, I mean, I don't know when. I'm always talking about 2018. I remember you were a lender in 2018, right?
right.
I remember in Sacramento, it had to feel towards the last half of the year super slow, and rates reached about 5%, increased approximately 1 percentage point. So that was like pretty remarkable. But now inventory is much, much less. And we had this even, I mean, way bigger increase in rates. Mortgage News Daily had an article I made a video about saying that this increase prior to these two last increases, that they made an article on the evening hours on Friday before we had these big increases. Or actually, I should say what it's today, Monday. So before today's increase, that the rate increase was the worst since 1979. So now it's going to be even worse than that.
Right. Yeah. And I mean, it's tough because like when people show stats and they say, biggest increase since this date or most dramatic, it's like, realize we're coming off record lows, right? We're coming off record low of all time. So when people are like, foreclosures are up, well, no shit.
1,000%. Yeah.
Yeah. We just came off 2 years where you couldn't do any foreclosures at all,
Right.
and so, there's memorandums in place or moratoriums in place where you couldn't do them. And so like, yeah, of course, foreclosures are up 900%, but, from record lows, they're up faster than they've ever been. And I think it's important to think about it in context. I understand it's been a dramatic shift. It's happened really fast, and going from 2.75% to 6.25% is drastic, and it's going to affect a lot of folks. It doesn't mean that, all the demand for housing is going to evaporate overnight, right? There's still a lot of folks that want to buy housing. And like you said, with the inventory issues we have, there's no there would have to be an event that would cause a lot of supply to come on to really see a housing crash. And I just don't see it. I don't see foreclosures coming. I don't see, builders miraculously being able to complete, thousands of homes within a month. Unless Elon Musk has some underground plan where he's also got a, housing company that's building underground housing or something. Yeah, it's going to be, whether it goes from, 20% appreciation to flat, or 20% to 5%, or 20% to -10, it's going to feel like a sharp right turn, because it's going to be. It's just not going to be like this, right? It's not going to be an event like we saw
in 2008.
Oh wait, yeah, because
I don't see an event either. I mean, I made a video, and I don't know if you saw it, Matt, but or the article, I should say. I posted this video at 12 p.m. today. It's on housingwire.com. It says, basically our home price is going to be decreasing. And so in that article, what they stated is that historically speaking, we need like a 6 months inventory for our balanced real estate market and to approach like basically a buyer's market. But they're stating that housing supply would have to get over 4 months with, quote, some duration. So in other words, for a certain period of time, not just for 1 month. And then total inventory levels to get back in the range of 1.5 to 1.9 million. So right now, housing supply, according to the National Association of Realtors, is like 2.2 months. So housing supply would basically have to double. On top of that, inventory levels, according to NAR, which includes pending home sales and active listings, is 1 million houses. So supply would have to increase by 50% to double the current levels. So we have a long ways to go. And I don't really see anything that I'm seeing either that's going to be triggering a lot of people to list. I was under the mindset that we're going to be seeing a lack of inventory or new listings because people like myself, probably you as well, locked into the rates of less than 3%. So why will we sell? I mean, if I were to sell my house and buy a new one at current rates, I'm sure my mortgage payment would more than double, because I'm locked at 2.6%. And my home prices, I bought it 4 or 5 years ago or something like that, is a lot less than it would be if I bought something else new. So anyways, I thought that was the case, but then we saw this big increase of new listings. But when you look at the national level, though, every market's different. if you go on to Redfin, Realtor.com, we're not seeing giant increases of new listings. What we are seeing is a slight increase in supply because demand is decreasing. And so I think I'm still thinking that's kind of this mixed bag of people like they bought a house maybe within the last 5 years. It's not the house they envision themselves living in for another 5 years. And so they want to cash out. Maybe they want to move to a different place, get a new house or something, or just rent. But there's another group of people, which is a large group of people who have a very low mortgage rate. They don't want to move because if they do, they're going to be paying a very high rent or a very high mortgage payment than they do right now. So because of that, in my opinion, we're not going to be seeing this giant increase of new listings, but we are going to see an increase in supply because demand is waning.
Yeah. I mean, I think it's,
Hey, Kevin. Hey, Suresh.
I was at a, my kid's end of year baseball party yesterday, and I'm talking to a guy who works for a home builder and, or multiple home builders. He's on the supply side. Like they're not blind, right? They see demand is coming down. And so builders aren't going to be in any hurry to build more. Their costs are higher than ever. In places like California, it's more expensive than it's ever been, before you even get one, stud in the ground. And so I think it's going to be an issue and it's going to, exacerbate, like you said, the increase to supply is going to be more of the fact that like the stuff's not flying off the shelves as quick, right? When stuff comes on, we've got, active inventory where it's not sold yet. And if it takes 24 days to sell instead of 14, then, the supply is going to increase that way, but it's not going to be, due to more people listing or that, to your point too. I've ran the numbers for multiple clients. I've ran the numbers for myself. If I bought and did a small upgrade, my mortgage payment would triple, so I'm going to stay
triple. Wow.
Yeah. Like I ran the numbers too, because like, I'm not going to buy the same house. Right. So I'm going to do an upgrade, but really like not a huge upgrade from a $700,000 house to 1.2 million or 1.1. If I took, a big chunk and threw 20% down at it, being at 5.5 or 5.75 or 6% versus 2.5 makes a big difference on your payment. Right. And so people are just going to choose not to have their mortgage payment triple, which is going to, constrict supply when folks aren't selling because, I mean, that stuff, folks take that into consideration. It affects, people's behaviors.
Big time. Absolutely. In regards to like new houses hitting the market, I shared a video when the U.S. Census Bureau announced construction numbers. They typically do that, mid-month. So we'll have the latest in about 5 days or so. But they definitely have shifted from building multifamily, which are for rent, from single family to multifamily. So for housing permits, single family houses down 4.6% month over month. The latest stats we have is March 2022. So permits pulled for single family year over year down 3.6%, whereas permits pulled for multifamily, that's 5 units or more, up 16%. So up 16% versus down 3% for single family. Also for housing starts, we're only up 3.7% for single family, but for multifamily, up 42.3%. 42.3% versus only a 3.7% increase for single family houses. Absolutely crazy. And that's why we're not going to see this big increase in single family construction, which is going to flood the housing market, in my opinion.
Right. Yeah. And that's a leading indicator, right? When you talk about permits,
sure.
Like I wrote those down because sometimes I get busy working on this dang business.
No worries at all.
Don't have time for the stats, but that's worth probably repeating that, permits, you said, are down 3.6% on single family. And like I said, builders aren't blind. They realize demand's going down. They're not going to go out there and be building more, not knowing what demand's going to be like 12 or 24 months from now, which
for sure,
like alert, like it's going to be lower if less people can afford to buy housing. But that's interesting. Both permits and starts are like so much drastically higher for the multifamily stuff.
Yeah. I mean, the single family obviously is tied more directly to mortgage rates. Builders know that. And so if you're going to put a deposit down on a dirt lot right now, like good luck. Like what's your mortgage payment going to be? What's your housing payment going to be in a year from now when the house is built? Totally crazy. Let's see. This gentleman here is, what are your thoughts on sub 2 to purchase a house? I believe he probably means sub 2% mortgage rate.
No, I think he's talking about subject to, like if you buy it from a seller who's,
this is why you're on the live stream here. I don't know.
Yeah. So, I mean, that's the thing too, is when markets get crazy like they are now, buyers get creative. I work with a ton of investor clients, and this is like, an investor specific question where, you can buy a home subject to, where you basically take over, the debt on a property, and it could be subject to a tons of different terms. I think that there's a ton of win-wins in this. So like, if I was just answering this broad of a question, it's a great idea if you can find a seller who's willing and able to do it. There's a certain seller profile that's going to be willing to do this and able to do this. Some people are like, hey, listen, I've got to sell this house. I need the equity because I'm buying in Tennessee, or they need to do a traditional sale for a number of different reasons. Some folks are able to do a subject to sale. Some folks are able to do some sort of seller financing where, it benefits them as well, whether it's tax reasons or any other reasons. But I know a lot of folks playing in our market, Sacramento County, Yolo County, Yuba, who are able to find these sellers, find some sort of win-win, do a subject to purchase. And in some cases, this is helping the seller avoid foreclosure, avoid bankruptcy and things like that. So yeah, go out there and find a subject to that's a benefit to the buyer and to the seller.
Thanks, Matt. That's why we have you on here, man. Hey, when do you need a bounce? Because you have a 3 p.m. live on your channel.
Oh yeah. I mean, I guess I got another 10 minutes. I need all of 5 minutes to stretch, do some jumping jacks, and then I'll jump on my live
push-ups and stuff. Yeah. Whereas me, I'm trying to figure out how to plug all my outlets in here.
I'm all dialed in now. I'm just logging off of your StreamYard and onto mine. So
there you go. Yeah, exactly. Maybe this is a question for you, Matt.
Why do loans get an extra 1% on top of your rate? My loan officer told me it was for escrow fees, etc.
Oh, it must be referring to closing costs, I'm assuming, right?
Yeah, that sounds like it. It sounds like, when you're putting 5% down on a home purchase and you're buying something for 400,000, some people, and I talk with first-time buyers all the time, are like, okay, that's 20,000. I can prepare for that. You're going to prepay some property taxes. You're going to prepay for some homeowners insurance. There's going to be title fees. There's going to be there's going to be a number of different costs. And so those all kind of bundle into closing costs, which are actually probably closer to like 2% of the purchase price. So you could, if you're putting 5% down on a house and you're buying it 400,000, that's $20,000 down payment, plus prepaid escrows, plus closing, plus the title fees and lender fees, whatever else, is another 2%, probably 28,000 cash to close is an accurate estimate. But you should, and this is some advice to everybody out there, when you're getting yourself pre-approved, not only to get pre-approved to say, hey, I can buy it 400,000, but what we're providing folks is an accurate Excel spreadsheet that shows you, here's your monthly payment. Here's tax and insurance, everything included, what the payment's going to be. Here's the lender fees. Here's the title fees. Here's the prepaid escrows. Here's your total cash to close. We provide that to folks in an editable Excel spreadsheet to where you might adjust it and say, what if I bought it 380? What if I bought it 420? Cool. Yeah. And all that stuff kind of auto populates because you want to educate yourself beforehand. You don't want to just be walking through and fall in love with granite countertops, submit an offer, then realize, extra 10,000 out of pocket you weren't accounting for.
Yeah, exactly. I mean, the worst thing to do is go out looking for houses before you get pre-approved. I mean, that's really like the worst thing you can do.
Yeah, for sure.
Mohammed, yes, this stream is going to be saved. It's going to be on my YouTube channel. So check it out. We still have 1,000 people watching the video right now, which is pretty awesome. Thank you everyone for joining us. So awesome. 75 basis point. Yeah, it's going to be interesting to see what the Fed does on Wednesday. I cannot wait to see what they're going to be doing there. Maybe this is the one for you. Delta between 15-year and 30-year.
You know what? This is a really good question because it it fluctuates, right? Sometimes the delta is larger, sometimes it's smaller. Over this last year, with mortgage rates so low, we saw delta as low as 0.5%, to where,
Half a
you know,
percent.
yeah, like the
Yeah,
30-year
right.
fix
Yeah,
was
I know
2.75 and
that. Yeah,
15 was only 2.25.
right.
As rates go up, the delta gets larger, as you would imagine. Right now, it's probably around 1%. Where, if the 30 years about 6%, the 15 years about 5, which, for some folks it makes sense. For a lot of folks, it's like, it's not that big of a difference. I can make extra payments towards my 30 if I want to pay it off quicker. And in an environment where rates were so low, people just, they wanted to borrow money for longer. Like, if I could go
Totally.
back, I would get more debt at 2.5%, right? That I could pay off over 30 years, because I'm paying back a loan at 2.5% while things around me are inflating at 8.6%. If you believe that CPI number, which is probably an underestimate as it is.
I did the same. I just got like the kind of the largest loan that my lender would give me when I bought the house, because I wanted money for a remodel. And I figured, borrowing at 2.6%, that's just over 30 years is incredibly low. So why not? I mean, you can basically invest the difference and do very well. All right. So let's see here. Orlando. Hey, for Chicago. He's a longtime subscriber of mine. Hey, Orlando. No.
I just saw an interesting comment. Rent to own is coming.
Rent to own?
Yeah, which is an interesting thing for somebody to comment, because you start to think about when some of these, big conglomerates buy neighborhoods, and they're buying so much single family. Like, what's the play? What's the end game? And that comment just hit me, because I thought to myself, you know what, like that rent to own model can be a moneymaker, right? And if you control enough of the inventory, and you tell people, like, listen, I'm going to do a rent to own deal with you. One, the people are taking care of the house a lot better than a renter would, because it's possibly theirs if they can make good on the contract to buy it.
Yeah, true. Yeah.
Yeah. And then somebody else's follow-up comment was like, it's a scam, and most people don't succeed. Interesting, to say the least.
It's a interesting. Yeah, I don't see it too often. I don't think I've ever come across a rent to own thing. John, yeah, I should do more lives. Actually, it just updated my StreamYard again. Actually, it wasn't using it for a long time. I haven't had a live stream since October probably, and it's been basically more of like a time challenge. And but yeah, probably should.
Congrats on the new baby, Jason. I'll put that out here in the universe too. Like, if you want to go live, if you want to do it once a week, I'm in. I really like the live format. I think it's really good, instant feedback for people. And, whether you like us or hate us, we're here to, tell folks what we see.
The truth.
So let me know if you want to do it. I'm in.
Appreciate that. I definitely want to do more. The setup I have now is definitely much more private. For those of you who don't know, my wife and I remodeled our house. We were out of our house for 6 months. We actually just moved back like a month ago or so. We were in a rental property, and my office, it shared a wall that was like paper thin to the family room. So I could literally hear like dinging on a bowl, and it would show up in the video. And so now it's like much more private. So I probably can do more of these live streams. Especially when the baby sleeps. Last night, baby did not sleep. So that's why I'm like, have like tons of coffee in me right now. But you have, how many kids you have, Matt?
I got 2 boys. Yeah. 9 and 13. Yeah. So I'm past this, I remember that phase of life where, the conversation was, are they sleeping through the night yet? Once you get them sleeping through the night, then you get a little bit of relief. And I probably got bags that have been caused by, either the mortgage industry or kids, one of the two.
Yeah, right. Totally hear you on that one, man. I probably have much more gray hair because of all of it, but hey, big smile on my face because of it too, though. All right, let's see if anyone has any questions for Matt. I'm trying to look down the Las Vegas housing market. Yeah, I really don't. I know about like averages and across the United States and also in Sacramento, but Las Vegas market, I heard there's a lot of inventory hitting the market there, but really don't know.
Yeah, Northern California is
Good
where
idea.
Jason and I both play, and besides that, it's kind of just word of mouth on the rest of the country.
Yeah, I let people when they comment saying, "Hey, here's what I'm seeing in my market," because I don't really follow. I can't follow every market, right? Um,
Get in your mortgage questions while you got them, because I got about 60
yeah, if you
seconds.
see any there, Matt, then let me know. Gosh, it's gonna be interesting. Is the CPI going to continue increasing or what? It's going to be interesting. That's going to cause more rate hikes by the Fed. They're going to
Tony Deep
pivot.
says it's going to break 9% next month. I wouldn't be surprised. You know, just the way they calculate it is just it makes you wonder how much faith you're going to have in it. Like the housing, one of the housing metrics that they follow is they literally survey people and ask them what their house would rent for if it was a rental.
Really?
And like, it's a homeowner that might not own any rentals, might have zero clue about the rental market, and be like, I don't know. Like, they might have a mortgage payment of $1,400, and so they're like, I don't know, I'd rent it for $1,500. Sounds fair to them. Their neighborhood, the houses rent for $2,500. Like,
Yeah.
how does that go into a formula for the cost of housing? I don't know. I could rant on for days about that. I do want to plug Matt the Mortgage Guy channel one last time.
Yeah,
I'm going to be live on my channel in about 5 minutes. I appreciate you having me, Jason. And I think
absolutely. I'm going to stick around too in case everyone has questions. But yeah, thanks so much for joining, Matt. And definitely like short notice. I just reached out to you like 2 hours ago thinking this would be a good day to do a live stream, considering that the rates have reached 6.18%, which is just like mind blowing. So I really appreciate your insight. And then, yeah, we'd love to do this again. And yeah, for those of you who don't know Matt, just Google Matt the Mortgage Guy on YouTube and you'll see his channel there, 15,000 subscribers. Thanks so much for all you do, Matt. And thanks for joining us today.
Thanks for having me, Jason.
Yeah, and I'm going to be sticking on though for anyone who's still here. Good luck in live stream. All right, let me look through some other questions here. I've been talking to Matt for a little bit here. Careful consumer. Appreciate that so much. I do my best. Try to give you guys like unbiased, like data straight from the source. That's really like the focus of my channel. So thank you so much for that. I definitely appreciate that. I haven't done much research about this. Dennis, do you think the Fed's going to be able to sell all their mortgage-backed securities? I honestly haven't done any reading whatsoever about this, although people have been commenting about it. So I probably should, because that's going to be a key factor here. Let's see. Housing market in Europe. Pavel, I know nothing about the housing market in Europe. So sorry, I do not know. Anyone else knows? Comment below. Yeah, I hear you. Bought a house in April 2021, 2.7% rate. Yeah, mine's 2.6. I'm not going to be selling anytime soon. Never, ever going to sell. Yeah, I mean, like, if you're going to be if Uncle Alpha, you're going to be selling your house, you're basically going to be over doubling your mortgage rate. Rates right now, over 6%. Probably not going to see 2.7% for quite some time, I'm guessing. And that's one reason why I'm not going to sell. I should do the math on that to see how much more my mortgage payment would increase if I was to sell. John says, I don't understand why people are even buying homes at these prices. Just stop. That's the sad thing right now, is that we're seeing all these kind of early signs that buying demand is decreasing. We're seeing increases in supply, but home prices have not gone down yet. I mean, the asking price really hasn't gone down. Of course, the sold prices haven't gone down. That's a lagging indicator, but really not seeing like this benefit to buyers just yet, except for there's more options out there. We'll have to see how that changes though, because if demand decreases greatly, that's going to impact prices eventually too. But the market's so slow to react to differences in mortgage rates, for example. Joey, first time on Jason's channel. Awesome. Thanks for joining. Matt knows me as a longtime subscriber. Sorry, I should have posted your comment there when Matt was here. Thanks for hosting, Jason. Yeah, my pleasure. Not sure if any of us expected rates. Yeah, absolutely. Are we seeing SAC market cool down? You know what we're seeing in Sacramento? A giant increase of price reductions. I wouldn't say a giant increase. Like, the number of price reductions is increasing greatly, but we're seeing a giant increase in housing supply. Last I saw was for May. an increase over 50% compared to the previous month. So a lot of people were listing their houses for sale. Yeah, it's going to be interesting to see what happens. We're seeing price reductions right now. Even though we're seeing an increase of supply, we're seeing a decrease of pending home sales. So all kind of like leading indicators here. Maybe I should touch more about the market in Sacramento in other videos here. Hey, Alex. Glad we are renting. We want more views. Okay. I'm just reporting like the latest housing market trends, and I think a lot of people kind of appreciate that. How do you expect institutional investors to be affected by the housing market cool down? Any chance their positions will be compromised? So the only way, so most people who are investors, they're buy and hold, they have renters. In my personal opinion, the only way they'll be impacted is if they have renters who are not paying the rent, or if rent or the rent prices go down, right? So the rent prices go down, that's going to decrease their ROI, which could impact their investment decisions there. But if rent maintains the same level, or maybe it goes down just a little bit, I really don't see investors being affected too much, because they're really impacted more by not a decrease in home prices because they're buy and hold. They're really more impacted by changes in rents. So we're not seeing any decreases in rents just yet. So they're really not impacted just yet. Unless maybe if they have, mortgages, if they didn't buy with cash and they have like, let's just say adjustable rate mortgage, for example, then of course they're impacted. Just depends on what they use to purchase their investment. I don't know. Sellers and buyers are screwed. Mike D, 90 days since May. Okay, that's awesome. The best time to buy is now. All right. So national average interest rates is not accurate at all, since most buyers are going to get rates way higher. I was quoted 6.2% interest rates back in April. I'll have to say, when we're describing, or when I'm going over like mortgage rates, according to the Mortgage News Daily, this is based on a survey that's national. And so the average is at 6.18%. This means that's the average. There's going to be people who are going to get less than that. There's going to be some people who get more than that. What I will say, though, is that when I'm talking about these rates on Investopedia and the Mortgage News Daily, these are based on the average best rates. So in other words, people with excellent credit who are putting down at least 20% down to buy a house. And so you're going to be seeing fluctuations in that rate. It's not just 6.18 for everyone. You're going to be seeing big fluctuations depending on which lender you're talking to and depending on your financial situation. I hope that makes sense. Hey, please subscribe. That's it, Gwen. Thank you very much. Appreciate that. All right. Appreciate that. Yeah, I have no idea about the housing market in Netherlands, let alone like any country in Europe or outside of like US, unfortunately. I pay close attention to the United States, but not so much outside, unfortunately. Yeah, last week was, let's see, Mortgage News Daily. Look at the rates here. So yeah, yesterday it was 5.85%. On the 9th, it was 5.55. So basically on the 9th, what I believe was on Friday, right? No, Thursday. So on Thursday the 9th, it was at 5.5. Now we're at 6.18%. Again, the average for people with excellent credit, of course. The movie scene when the are yeah. Not your problem. Thanks so much for your donation of $5. Really appreciate that. You say the movie scene in which the gates are closing and you barely make it sliding in with all your efforts. That's what it's like buying a house in 2013. Yeah, I bought at a great time, 2013. Ended up being a really good time to buy a house. Yeah. Thank you for your donation there. Yeah, you're talking about the Fed, Ivan, I assume. Are they going to do 50 basis points? I certainly hope they do at least 75 basis points to cool off this housing market. I mean, really to cool off inflation, right? We'll have to see. Thanks for joining, Lady Hughes. Alex, thanks. Appreciate that. When's the housing market going to crash? Good question. If I had a crystal ball, I would definitely tell you. If you didn't check out my video, guys, I made a video about an article on housingwire.com about what's needed in order for our housing market to cool down and for home prices to decrease. So take a look at that video. I posted it today at 12 p.m. What they basically said is that a lot of factors need to happen. We basically need a lot more houses to be listed for sale and then for housing supply to hit a certain number. So take a look at that if you haven't done so already. Yeah, I don't know anything about housing market in Vegas. I'm so sorry. Time will tell, party. I mean, gosh, yeah, horrible time to refi, that's for sure. I mean, why would you refi at 6.18%? Actually, if the rates are higher for refis, so investedpedia.com right now is quoting average rates at 5.92% for purchases. That's for a 30-year fixed rate mortgage. But for refis, 6.26%. So an increase of about 30 basis points to refi. Man, that'd be a big increase, 10% in 1 year. I think we're talking about mortgage rates. We'll have to see. 25% correction. All right, I'm going to try to get through these comments here. Your rent's $1,500 a month in New Jersey with taxes would be $3,600 if you were to buy a house. That's crazy. I mean, why would you buy at that moment, right? Your payment would more than double. Wild. A lot of people think a crash is coming. It sounds like, well, this is party again. 50%. B-boys. Mike D. All right, let me get some other questions here. If you guys have any questions, just say question. That way I can track these a little bit easier. Good question. Housing crash. Most people think housing crash when prices go down at least 25%. But we have a lack of houses for sale. Still, we need a lot more houses to be listed. Supply needs to get up. Rebecca says that she's been watching the market in her area. It's gone down $100,000 already. I'm curious what the average home price there is and what market. Every housing market's different. Austin, Texas. I hear Austin, Texas has a big increase in price drops and supply and new listings. So I'm wondering if that's going to change. Peyton, sorry, I didn't see your donation there. Thank you very much. Have you seen a change in buyer-sell demographics? Not necessarily. The demographics, let me think about this one. I mean, I think that maybe slightly, I would say that in 2000, let's say the middle of 2020 through the middle of 2021, a lot of work from home people, like in Sacramento, a lot of people are moving from more expensive areas like Bay Area, for example. We helped so many people move from Bay Area, Los Angeles, New York, Texas, who had work home arrangements. So they could basically move anywhere as long as they had Wi-Fi access. So why live in your 1-bedroom studio or whatever in San Francisco, paying $4,000 a month when you can take that, same payment or less and buy a, big house in Sacramento, for example. So I think the demographics really changed when COVID hit. And I think we're seeing less of that right now because of people going back to work and a lot of people who had the ability to work from home now really had that ability back in 2020. Yeah, I hear you on Taurus, Jen. I won't sell any of my properties bought last year, a couple of years ago. Rate was, yeah. I mean, I'm at 2.625. Why would I sell? Yeah, hard to know, Kat. That's a good question. Are you talking about mortgage rates, Charleston? That'd be pretty crazy. I mean, we saw 18% based in like what, mid 80s. My parents bought a house in the 80s and their rate was, I think it was 15% for a 30-year fix. So insane. But home prices were a lot less back then, though, right? I mean, yeah, hard to say. I mean, hopefully people buying houses right now are staying in their houses and want to live in them for a long, long time. All right. Yeah, it's pretty awesome. We're at 900 still, pretty crazy. Thanks everyone for joining. Really appreciate it. If you guys have any questions, just say question, and then I'll get your questions answered here. Thank you, SK. Appreciate that. Love your videos, information you provide. I really appreciate that. It's a lot of work. I will say that, but it's also a lot of fun. I definitely have a lot of good time doing this. Jason, how much has inventory increased in Sacramento since April, and have sales prices dropped at April? This is what happened here in Utah. Yeah, we're not seeing a drop in prices in Sacramento just yet. We're all seeing a big increase of supply, though. So supply has increased like 50% in 1 month. So from April to April to May, inventory increased like 50%, which is just mind blowing, pretty crazy. And we're also seeing, because of that, price reductions. So I actually saw a for sale sign the other day that had a rider at the top. You know, it has a for sale sign, the realtor's contact information, but at the top it says new price. Haven't seen that in a long time. So we're seeing more of that because there's not as much buyer demand. There's a lot more housing supply. Absolutely, you're more than welcome. I definitely need to do more of these. What do you guys think? Should I be doing more live streams? I haven't done these in a long, long time, but definitely wanted to bring this, kind of talk about the increase in mortgage rates. Yeah, not clickbait. Actually, this morning, the Mortgage News Daily said it was 6.13%, which is funny because it's June 13th, 6/13. But they must have updated it. So if you Google Mortgage News Daily, you can take it to the average rates. So as of today, it's 6.18%. That's an increase of 315 basis points compared to 1 year ago when rates were 3.03%. Totally insane. Thank you for that. I like all of you guys for joining. Yeah, rent to own. Thoughts on building a new duplex or fourplex as a purchase from a contractor with these? I'm building a new purchase. It just depends on how it pencils out, right? I mean, you have to look at, if you're thinking about buying a investment property, whether it's a single family home, a duplex, fourplex, triplex, whatever, you just got to look at, what do you think you're going to be renting the rooms for or the units for? Compare that to your estimated housing payment to see if you're going to have a positive return or not. That's what I would do. If you want to get a kind of estimate about rents, then I just go onto Zillow. You actually can look for advertised rents and look in the area you're looking to buy in, and get an idea about whether or not to get an idea about how much you think you can rent out the units for. Then kind of do the math after that. So, you may see that because the rates are so high that your return is, going to be negative, or because you may see that rents are so high that it doesn't matter that rates are so high. So I would focus more on your return on investment based on what you feel you're going to get for rent versus just concentrating on the rate. Good surfing. Yeah, good surfing. No, just kidding. I don't know. I don't know too much about the market there in SoCal. Same for Long Island for sure. No idea. I'm so sorry. Question: what is the all-time average rate? That's a good question. I actually don't know the average. If you actually Google, it's either Freddie Mac or Fannie Mae. I think it's Fannie Mae. They have a really good website showing the average by year. So you can look at prior years going back to, I think, to the 1970s, and you can see averages for the entire years. But for, historical speaking, the last 10 years or something, I don't know any website that you can see that at. 46%. That's a specific number. I have no idea. That sounds like a lot. I don't think that would happen. But I know that you've seen a big increase of rate of prices there by over 30%, which is crazy. Good question here. Opal, are VA loans soon to be accepted again, or do you foresee cash offers still taking over? So the most recent stats we have from the National Association of Realtors is that on average across the United States, about 25% of all sales are cash. Will that change? We'll have to see. But I think you're talking about VA loans not getting accepted because at times it can be a little bit challenging to get offers accepted for VA loans depending on the property. So for you guys who are not familiar, if you have a VA loan or a FHA loan, loan that's backed by the federal government, they have certain health and safety standards that must be met at the house. So, if the house has like termites, for example, or there's like a, ton of issues with the house that the appraiser would call out, they're going to require that to be fixed prior to closing escrow. So depending on the house, if the house needs a lot of work, then yes, it can be very challenging to get offers accepted using a VA loan or FHA. But yeah, if we see, like, let's just say we have some more normalcy in our housing market, demand cools off greatly, houses sit in the market longer, home sellers get less offers, they would be more inclined to accept any offer, let alone like, someone who's using a government-backed loan. But VA loan, is an awesome loan product though. Putting 0% down, it's really, really an awesome loan product. That is true. Nothing's impossible. A lot can change in a short period of time. Thank you for joining. Yeah, hard to say what the real CPI is, but it seems like it certainly is higher than what they're telling us, right? Oh, interesting. Modesto, California, huh? Prices started to drop. You're seeing price reductions there? This is the question I get pretty often. Like, should I buy a house or not? I always tell people, buy a house when it's right for you. Don't tell a real estate agent whether you should buy or sell a house. Just buy what's right for you. Make sure you have long-term time horizons. Is probably the best advice I can give you. So if you're saying, hey, I want to buy a house, but I want to sell it in a year, don't buy a house. Have like 7 to 10 plus time horizons where you plan not to sell the house for at least that time frame. Good question. Do you think real estate market will hit 7% before the end of the summer? If the Fed pivots and continues to do more and more rate hikes than previously planned, that's going to cause turmoil in the bond market and cause mortgage rates to increase further. So going to be interesting to see what the Fed has to say about their projections and also their plan going forward. That's going to give us a lot of insight. So if they are going to be pivoting greatly, meaning they're going to be increasing rates much more than anticipated, then that's going to cause mortgage rates to increase. So we'll see what they have to say on Wednesday. 4.75 is a great rate right now. Wow, that just goes to show there how rents, you're paying $2,500 a month. The new tenant's now paying, $700 more per month. Wow. I appreciate you, El. Love this channel. You're awesome. Thank you so much. You have to join him on his live stream right now. I think he's live streaming right now. Sorry, I didn't see your comment until now. Jason, how much more do you think rent will run? I don't know. Impossible to know, really, to be honest with you. Thanks for that. Dallas market. Gosh, I have no idea about Dallas market. Anyone know? Oh, geez. Block this user. All right. Spammers. I wish I knew. Thanks for your question, though. Geez, 4.1 is an awesome rate. All right, let me get through this. I got the jump here in about 10 minutes. I want to try to get your questions answered, though. Wow, look at that. Just quoted 6.375 about an hour ago with excellent credit. Wow. Pretty amazing. I mean, just goes to show that we're only talking about averages here. 6.18. Some people will get more, some people will get less than that. But I know that it's based on a survey, and that survey is pretty wide. It's also based on sometimes people paying points or not. But that's I mean, what a difference in 1 year. Terry, thanks for being a subscriber. Thank you for joining. We had a lot of new subscribers. I think like 4,000 or last increase the last in the appraisal industry there in Atlanta, Georgia. I've noticed the market starting to cool overall. Kind of feels like summer. Oh, interesting. We definitely need the housing market to cool down in many markets, right, Terry? Oklahoma's cheap compared to other places. Yeah. Wow, $98 a square foot. I think in Sacramento we're like $400 a square foot, something like that. Yeah, it takes time for home prices to decline. The reason is that, it's, a house is not a liquid investment like a stock, for example. That's why the stock market can fluctuate so much, but it takes a while for mortgage rates to really impact the market. So you think about people looking to buy a house right now, they get an offer accepted right now. They're not going to close until the middle of July into August. And so that's why I always tell people when we're talking about any stats related to a house that's sold, it's a lagging indicator what the market was like a month and a half ago when the home seller accepted an offer from a buyer. Thanks for your videos. Cinnamon Toast Clutch. That's awesome. Like your name or your username. Thank you for videos. Thanks for supporting the channel. Bought October 2019 at less than 3%. And probably thinks, oh, cool, right on. Help me a lot with your, oh, cool. That's great to hear. Love helping people. I really appreciate that. Oh, in Sacramento, cool, right on. Congratulations. That's awesome. And you have a rate of less than 3%. It's amazing. I always tell people, buy what's right for you. I actually made a video just before this live stream. Redfin had a really good article that other news outlets were reporting on as well about a drop in luxury home sales across the United States, how it's going to be impacting our market. So one thing I didn't mention in that video that I probably should have, it was something I thought about after I hit the stop record button, is that in the spring months of last year, 2021, we saw a giant increase of luxury home sales. And that's one reason why we saw record high home prices, because we're talking about record high home prices. It's regarding like the average home price that sold or the median sold price. And so when you have a giant increase of houses that sold for over $1 million, for example, that's going to impact overall the stats across the nation or by state for home prices. So that's one reason why we saw home prices increase so much. But because we're starting to see a decrease in luxury home sales because of rising mortgage rates and, of course, the stock market tanking. I mean, the NASDAQ is down like 30% year to date, which is absolutely insane. So a lot of people buying luxury houses are using stock in order to buy houses, right, for a down payment or for buying in cash. And so that's really decreasing the amount of luxury home properties. And so that could decrease home prices overall, too. Thanks, Ramel. Appreciate that. I need to drink some water for this, my voice here. I'm curious about Austin. I know that in Texas, your property taxes go up quite a bit compared to the year compared to the previous year. So interested to see what's going to happen there. Let me see if I can find any other questions here. If anyone has questions, can you please address Matt the mortgage rate on this rationale for why he's sorry, I didn't see your question until now. Maybe join him on his live stream. I didn't know he said that. If he did say that. Question. John, mortgage rate in Florida at 5.7% right now. Do you think I should lock in this rate with my lender for 120 days by placing a $1,500 that is credited at close? So do you get your money back if you decide not to buy? That'd be a question I would want to know. But it kind of just goes back to the question, like, should you buy a house or not? And it's just, kind of like it's anyone's, I don't know your situation, of course, so it's hard to say. There's no harm in getting on a wait list, but if you're going to put a deposit down on a dirt lot, I mean, you're not going to know what your mortgage payment's going to be like for, months down the road, unless you pay a large premium to lock in your rate. So that's why I think it's a bad time to put a deposit down on a dirt lot. Who knows what mortgage payments are going to be like when you ultimately can lock in your rate. Wow, 1.98% from Morton, Scotland. Hey, AB, thanks for joining for Scotland. That's awesome. Next 4 years. So it sounds like maybe like Canada. Canada, you definitely you lock in rates in short intervals, like maybe every 5 years. So maybe that's what happens in Scotland as well. In the US, a lot of people or most people use 30-year fixed rate mortgages. So you lock in rates for 30 years if you keep the house. Yeah, a lot of people are asking about this, Eve Queen, about mortgage-backed securities getting no bid. I haven't done any research on this whatsoever. I'm embarrassed to say that, but I have no idea. Looked in the Santa Cruz area, lots of price drops. Oh, interesting. I haven't seen that. And still sky high prices. I actually went to school at UC Santa Cruz. I can't believe that home prices there. Last I looked, I think the average or the median sold price there was like $1.2 million. A lot of people moving there and commuting, over the hill once a week or something. Question, Bernie, what's your question? What companies do you recommend to get pre-qualification and obtaining a mortgage? So I actually would reach out to your real estate agent. So if you're working with a real estate agent, often they have like a real estate or a loan officer that they know, like, and trust. So that's what I would do. So wherever market you're looking to buy in, contact your real estate agent, ask them, hey, who would you recommend? If you're not too sure if you want to buy a house, you're kind of just getting your feelers out, just go to your bank or go anywhere really, and to get pre-qualified. You kind of see how much you're pre-qualified for, and then do a search online to see if there's any houses based on your price range that you're would be interested in. Thank you for tuning in. Thanks, Cole. I appreciate that. I love analyzing data. It probably shows in my videos. I probably do it too much, but I really enjoy making these videos for you guys. It's a lot of work, but I really enjoy doing it. So thanks for your support. Yep. Yeah. If your home is underwater, that doesn't mean your mortgage is. Depends how much you owe on your mortgage. Good question. Good comment. Yeah, I have no idea about mortgage rates in the next 6 months. It's like a moving target. Thank you for support. I am not moving to Texas. I've been in Austin, Texas. Cool town. Yeah, I'm sure a lot of people have moved there. I have a friend who moved there from California to Austin, Texas. I think you're saying when I should do live streams. Yeah, when there's big news. Yeah, I want to do live stream today because I could not believe it when I saw that rates were above 6%. It's just like 2 days ago was 5.5%. It's just crazy. More live streams. All right. I'm seeing other people in the areas I'm predicting. Anything. All right, let me see if I can check other questions here. A question: finally seen some better homes for sale, but should I buy a house? Should I buy an easy to afford home or buy something that I like but more and more money in your videos? Well, thanks to you for your support, James. It's just like a personal decision, right? Some people are comfortable with buying like a house that's maybe a little bit smaller or maybe not in like the perfect area. And then they want like I don't know, the ease of mind that their housing payment's super low and they can totally afford it. Or some people stretch it in order to get like a house they envision themselves living for a long, long period of time. So this depends on your goals. Mike D, more live streams. Seems like a lot of people want more live streams. Yeah, this is because the rates jumped so much because we saw a scary inflation report a couple of days ago. And so because of that, a lot of people were anticipating that inflation was going to be going down. It actually went in the opposite direction. That caused a lot of fear in the markets, caused the yield on the 10-year US Treasury note to increase, and caused mortgage rates to increase as well. North of Thomas, not too sure about that specific area. Definitely sold quite a few homes in North of Thomas, but I don't really know about the market so much right now. What's been happening? Jeremy Knight, hey, thanks for joining, Jeremy. Didn't see your comment until now. Just said it was the worst crash ever. Yeah. Man, Coach M, what do you think about the Eldorado Hills housing market? We want to buy, but are afraid to be upside down quickly. I would say, don't buy unless you plan to move in 7 to 10 plus years. The market in Eldorado Hills has been absolutely nuts. I mean, last year I was helping a couple clients buy houses in like the Granite Bay, Folsom, Eldorado Hills area, which if you guys aren't familiar with that area, about half an hour east of Sacramento. And I had cash buyer up to about 1.2 million. And we're getting beat out over and over again by people writing offers with no contingencies whatsoever. It was crazy. I don't think we're seeing that right now because the market's cooled off a little bit. But yeah, hard to say what the future holds. Broderick Smith, what up, brother? Love your show. Cool. Houston, Texas. These rates are rising fast. Yeah, absolutely. That's definitely true. And Z-Man, absolutely. They've been low for way too long. I couldn't agree more, man. They've been low for so long. Sorry, Tony, didn't see your donation until now. Appreciate that. Okay, so he said rates will be 3% in 2023. So maybe he thinks the Fed's going to pivot, and because they've done so much damage this year. And then if they do that, if they decrease the federal funds rate again, then that could decrease mortgage rates again potentially. I didn't know he said that. Sorry, I didn't see your comment until now. Yeah, I bet a lot of people move to Tennessee as well. I don't know about buying land. Would know would be maybe Christina Smallhorn. Yeah, this is a challenge because with a family, we have two kids. I usually stop work at like 4:30, 4:45. So I can't really do like live streams so much at like 6 p.m., which I could, but family time after 5 p.m. Oh, you did? You might be making some money. I mean, builders should be getting hampered, I would imagine. Sorry, I didn't see all these like scammers and bots on the channel here. I'm just hiding those right now. Pennsylvania market. Yeah, I have no idea. I'm so sorry. 220,000 for a 2-bedroom in Sac. I don't know where you buy a 2-bedroom for 220. I mean, our average home price in Sacramento is like close to 550, 600,000. I wish I knew Mr. Patel. I don't know about the Pittsburgh market, unfortunately. What does it mean the Fed's going to be increasing, raised basis points? What we're talking about, the Fed on Wednesday is going to be announcing if they're going to be increasing the federal funds rate. That's the rate that banks charge each other to lend each other money overnight because of reserve requirements. So anyways, like long story short, it's basically like a loosely tied to mortgage rates. So when the Fed increases the federal funds rate, that could impact or cause mortgage rates to increase. And a lot of people really looked at that to see if the Fed is going to be, um, trying to do their best to combat inflation. So when you increase the federal funds rate, that one would assume would decrease demand, people, spending money, which would decrease inflation, which is what they're trying to control right now. But if you just Google federal funds rate, again, that's federal funds rate. Probably you find a better explanation on the internet. That's my best explanation for you. Yeah, I'm wondering about that too. How many people are priced out? Question. Do you fight for your right to party? Mike D. I used to love the Beastie Boys back in high school. Man, I probably have their CDs still. Jimmy, I think I answered your question here. Maybe it was, I don't know if it was you or not, but the consensus on buying a fairly new home versus getting on the wait list for new construction. I mean, man, if it was me, everyone's different, right? But I would not put a deposit down on a dirt lot right now because you're not going to know what your housing payment's going to be. Buying a existing house, you can lock in your rate, almost right away after you get your offer accepted. But when you buy a dirt lot and the house is not going to be built for 6 to 12 months from now, normally you can't lock in your mortgage rate until the house is much closer to being completed. But you can't. There are some lending programs out there where you can lock in a rate much sooner than that, but you have to pay a premium for that. If it was me and I was interested in only buying a new house, I would wait a little bit because I think that supply is going to be increasing. Because if you look at sales numbers or contracts signed from April, absolutely tanked, far below expectations. So I'm going to make a video once May's numbers are released. The Census Bureau released that, I believe, in about a week or so. So I'll keep you posted regarding that. But yeah, that's just my personal opinion. Am I trying to panic people and tell people home prices are crashing? I never said that home prices are going to crash. What I'm doing on this channel is to provide the most recent housing market stats straight from the source so you guys can make a more informed decision about whether to buy or sell a house. That's the whole goal of the channel. Just want to help people and not fearmonger people or give them false information. Thought investing out of state, a little bit challenging because you may not know the market you're interested in investing in. Hello. Got your locked in at 5.25. That's pretty awesome. Wow, look at that. And it just shows how rates have fluctuated so much. Closing in 2 days. This must be a 7-year ARM, I'm guessing. So 7 years fixed and then variable thereafter, I'm guessing. Anyways, early congratulations on buying your house. Mom just put an offer in Dallas. They lost out to 5 other offers. Wow, 50,000 over. Oh my gosh, seriously? That's the thing. $50,000 over for $1 million house is like nothing, but for a $300,000 house, that's over 10% of the home value. That's crazy. Yeah, 4.1% rate's great. But I think you're assuming that the 7-year is an ARM, an adjustable rate mortgage. I'm assuming. Good question here. This is outside my expertise. I really don't know. And I don't know anything about Columbus, Ohio. I'm so sorry. Yep, you can do that. The only I can't talk. The disadvantage of a HELOC, of course, is that the rate's variable. So you could buy a house using HELOC and then maybe refi to a fixed rate, especially if you put money into the house, you gain some equity. I don't know. I mean, all I'm seeing right now is mortgage rates increasing. And yeah, exactly what I say here. HELOCs are variable. Texas, yeah, home prices increased so much. Orange County, you know who would know would be Jeb Smith. I'm not familiar with Orange County. Yeah, I think I answered your question, Coach. Sorry, catching up with the comments here. I hadn't got a clue about the Canadian market. I'm so sorry. Depends on, I mean, this is like, for this question, it's just like depends on the balance between supply and demand. What we're seeing in the Central Valley in Sacramento, for example, big increase in supply, and we're seeing a decrease in pending home sales. So a decrease in demand and an increase in supply, but a collapse, not yet. We have to have a lot more houses listed for sale, in my opinion. You know, it's a good question about forbearance. Actually, just had told a buddy about this. You can actually still enter into a new forbearance if your loan is backed by Fannie Mae or Freddie Mac. You can get a 12-month forbearance still. Pretty remarkable. So you still can get it. I think there's around, like, I don't know, last I looked, around 600,000 houses or 600,000 people who are still in forbearance. Obviously, it's down from, millions of people that were in forbearance a couple of years ago. It's funny you asked, Luis. Any person event planned for your channel? Cool, Woodland. Yeah, you're just about half an hour north of me. I actually kind of thought about this, maybe an in-person event. I don't know if anyone would show up. It'd be fun to meet subscribers in person. I'm a little bit COVID conscious with having like a 3-month old right now, but at some point, I think this would be really fun, doing like an in-person event, be there, hang out, answer questions. I don't know. Would it be you and I don't know. I don't know if anyone else would show up, but sometime in the future, this would be fun to do. He works at the Fed by 0.85%. All right, we'll see on Wednesday, I guess. Oh man, yeah. Dennis, good question. What's your advice on folks who are in contract for a new home and estimate time is end of the year? So I always say this, it depends. Are you locked in with your mortgage rate already, or are you waiting for that to happen down the road? So here's the a pro for buying a new construction house. So let's just say 1 year ago, you signed an offer to buy a new construction home and you close in December. So the advantage is that you're buying when you're getting a contract when home prices were at that time. So obviously, if you're getting a contract in just January of, let's just say 2021, and you're closing 12 months later, you're by the time you're closing escrow, you've already had a lot of equity gain in your home already, even though you haven't even moved in yet. So that's a pro. The big disadvantage of it, though, is that when you get in a contract on buying a brand new house, let's just say it's a dirt lot, the house is not going to be built for 6 to 12 months from now. You're not going to know what your housing payment's going to be because you can't lock in your mortgage rate unless you pay a premium to do so. So hope that answers your question in a roundabout way. Do you recommend finding an agent or shop around for rates first? So if you're like just kind of like getting our feelers out, just kind of wondering if you should buy a house or not, you just go to your bank and get pre-qualified. And that way you can see how much you're pre-qualified for. And then take that information and then search in the area you're looking to buy. Just go on to Redfin or Realtor.com or whatever to see if what you're qualified for is what you want to actually buy. And if it is, you're seeing options, then reach out to a real estate agent. In contrast, though, if you're really motivated, you definitely want to buy a house, I'd reach out to a real estate agent first and then ask for a referral for a lender. Justin, with the housing market at a 9-month supply, and lumber low. Do you think home prices are about to flat? So this 9-month supply, if you go onto Fred's website, so I always talk about Uncle Fred, this 9-month supply is for new houses only. So just make sure everyone's aware of that. So for existing houses, not new houses, the month supply is 2.2 months. For new houses, it's 9-month supply. So yeah, we're starting to see a big increase of supply of new houses, and also a pullback of buyers as well. So I foresee that housing supply for new houses is going to continue to increase, therefore giving more options for home buyers. And one would assume, hopefully, that home prices in the new home market will decrease. I mean, that's pure speculation, right? My crystal ball broke a long time ago, but that's what we're seeing. Stay tuned in about a week and a half. I'm going to be making a video once the data is released for May for contracts signed for May for new houses. And I suspect we're going to see another big pullback in buyers. All right. I need to wrap this video up here. But I'm going to try to answer all you guys' question though. Rates to 10%. That's a big increase. I would say it's anyone's guess, but to go from 3% to 10% in 1 year is like basically unheard of. I don't think it's going to happen. Thank you, Edward. Appreciate that. Good looking family. I hope so. I would love to see more of like a normal housing market. We've been seeing those for quite some time. We're also seeing is that buyers in the Sacramento area are willing to pay more than the appraised value when they're writing offers. So yeah, we are seeing that for sure. Oh, 5.5 ARM at 3.5, low rate. Good question, Matt. Time will tell. Check out my video I posted today at 12 p.m. if you haven't already. It's kind of like a talk about what's needed in order for home prices to decline. Obviously, we needed home prices to decline for some normalcy in our housing market before a crash would occur. But I'm not seeing any big indications that right now that's telling me that we're going to be seeing a housing market crash. Willie, hey, Willie, what can happen if a buyer chooses not to do a home inspection if they decide to purchase an older home? What can happen? So first of all, if you're buying an older house, even a new house, still get a home inspection. I mean, I helped someone buy a new house a couple of years ago, brand new home. Still advised him to get a whole home inspection because you never know. What we found, actually, we did a sewer line inspection as well. What we found out is that the builder never hooked up the sewer line to the main. So if my client was to move in, take a shower, run the laundry or whatever, it would have backed up all this water into his house. And so that was $150 well worth spent. So anyways, I'm getting off a tangent here. So I would say any house you're looking to buy, get it inspected. It's your insurance policy. Highly, highly recommend doing that. Difference though is that if you were to write an offer with no contingencies whatsoever, if you were to back out after getting a home inspection, you could lose your deposit. But for the most part, I advise writing offers, having a contingency in place for inspections, and actually doing your inspections, especially for older houses, because you never know if you're going to uncover something big like foundation issues. If the house needs a new roof, for example, stuff like that. Fancy closet. But yeah, San Diego, I mean, gosh, prices there, I think they're over $1 million, if I'm not mistaken. Depends. San Diego is a huge area. La Jolla obviously is super expensive. Would I buy a home in Sacramento as a first-time home buyer? It just depends on your circumstances, right? Don't listen to a real estate agent. Just buy what's right for you. Yeah, great rate. Got a house at 2.74. Yeah, mine was I refied at 2.6. Super low rate. I saw that too. I just saw that article. I hope they actually increase rates by 75 basis points. It's needed to curb inflation and also this housing market. Yeah. Okay. Interesting. All right. I'm not familiar with South Bay whatsoever. I'm so sorry. Uh, Glad to help via. Nice, Mike D. We get meet up in Vegas, talk over some craps table. That's awesome. That'd be fun. Maybe Graham Stephan would join us. And I can't remember the flipper guy there too, who lives there. I can't remember his name. Redfin listed housing buy without an agent. I mean, gosh, there's really no disadvantage of using your own buyer's agent, and they look out for your best interest. Whereas if you go directly with a seller's agent, they're not going to be looking out for your best interest. I mean, sometimes it can work out, but in general, it makes sense to have your own agent. Do you think new home prices will fall? Eventually, yes. I think that we're going to see a big pullback in, this is just speculation, pure speculation, but when we get the housing market data for May, I think we're going to see another pullback on contracts signed for May. And that happens, if buyers are really pulling out of the new home market, we'll see supply increase there for sure. However, though, we're not seeing builders like doing tons of housing starts for single family houses. They've been pivoting to multifamily though. Hey, John. Yeah, inspection. Yeah, absolutely. I mean, having an inspection contingency can really save you. Definitely do your inspections. Best time to buy is when it's right for you. So hard to say. Rather than timing the market, just buy when it's right for you. Thank you for that. Hit the like button. Appreciate that. Still have 600 people watching. Can't believe that. That's awesome. Thanks so much for everyone who's joining. I'm going to try to wrap this up here pretty soon here, but I want to try to get these questions answered for you guys. I do my best to answer your questions in the comments of each video, but gosh, it's so hard when you're getting hundreds a day. I do my best. I really want to try to help you guys out. So maybe I should do more of these live streams. Rates right now depends on your situation, but right now the Mortgage News Daily is reporting that average rates are 6.18%. And that, by the way, is for people with excellent credit. I wish I knew about the market there in Washington. Z-Man, highly unlikely to see a crash. I think prices will recede. Yeah. I mean, gosh, if we have rates of 6% and more and buyer demand continues to decrease, even if we don't have a big increase of new listings, supply is going to be increasing. That's going to cool off this housing market. And it's so hard to tell. I mean, like whenever someone's saying like, hey, is the housing market going to crash, or what are home prices going to be like in 6 months? It just depends on how many people are going to list their houses for sale and how demand is going to be changing. And that's just like nearly impossible to predict. Oh, the Ninja. How's the Roseville market these days? Yeah, very strong. A lot of people looking to move there since 2019. Yeah, I mean, home prices in general in the whole greater Sacramento area. Roseville is only like a half an hour away from Sacramento. Giant increase in home prices. And regarding a correction anytime soon, I don't see it anytime soon because we're not seeing we don't have a giant amount of inventory compared to like 2019, for example. Not so much because we still have like around 20% of buyers who are cash. Yeah, I am so eager to find out about this, Jen. Looking for a first-time home since last August. Oh man, I feel for you because last August rates were around 2.7. Now they're 6.2-ish. Crazy. So yeah, I'm really eager to see what the Fed's going to say. I probably will make a separate video regarding that. More live streams, Scott. Thanks. All right. Washington price drops are happening, still very high. Okay. Yeah, overall, we're seeing pretty significant increase in price drops. We're seeing that in Sacramento too. Yeah, exactly. If we see more supply, less demand, at least we'll see less bidding wars. Like we're seeing like, I don't know, 2 to 3 offers ish on houses. It was, more than double 1 year ago for sure. I mean, it wasn't unusual to have like 10 offers on a house. Yeah, rates right or the yield right now is at almost just under 3.4% right now. Pretty crazy. Thanks, Mike T. I haven't reached out to Jennifer yet. Thanks for the suggestion, though. All right. Anyone else have any questions here? What's your view? It seems like the best strategy may be to rent rather than buy, at least for a year. Gosh, I mean, I wish I knew what's going to happen in a year, but it certainly seems like right now, like prices are still high. We have more options, which is great, but we're not seeing a decrease in home prices overall. Every market's different, though. Yeah, I wish I knew about the DC market. I really don't know. What's the main takeaway to this live stream session for us? I hope I answered some of your questions there. There. I don't know what I'm talking about. Thank you. Appreciate that. I could take a break. 4 o'clock. Yeah, I can about ready to shut my computer down here. I appreciate you joining, everyone. Yeah, interesting that we've reached all-time lows from Fannie Mae's survey for people who think now is a good time to buy a house. I make a video almost every day. Yeah, so what I used to do, honestly, I started the channel back in October 2019, so almost 2.5 years ago. Back then through, I don't know, the end of last year, I basically kind of scripted all my videos. I had a set thing I wanted to say. And it was very time consuming. It would take me 6 to 8 hours in order to make one video. Now I'm sharing my screen, sharing the latest housing market trends. If I wanted to, and I have done this, I can make 4 videos in one day. So we had a friend who passed away from cancer last week. And before that, I made 4 videos so I can spend time with hanging out with friends and such. So anyways, yeah, I'm able to make videos every day because I'm sharing my screen. They're not scripted whatsoever. I'm just kind of going over what I'm personally seeing in our marketplace. And that's how I'm able to make videos every day, or more or less every day. Sometimes I make 3 videos in one day or 2 videos in one day and then take 2 days off. It just depends. But yeah, I'm seeing a lot of growth in the channel because of that. Seems like a lot of you guys like the me making frequent videos. So yeah, that's why I've been doing it. Here's the ultimate question. And I have no clue. I have no idea. Thank you, Jen. Thank you for supporting the channel. Oh, thanks. Appreciate that. Thank you for support. Next live stream. I don't know. I should do these more often. I can't do them so much at night anymore. So sometimes during the day, maybe I'll try to do it once a week. I enjoy doing these. That's for sure. Please smash the like button. Appreciate that. All right. Oh, awesome. Bravo Mo 1982. Watching your videos for the past 2 months. Awesome. Welcome to the family. Thanks for your support. Thanks for that. I do my best, man. I really do enjoy making these videos for you guys. Hope you guys feel I'm giving you unbiased advice and unbiased opinions, really. Thank you for that. Appreciate that. Sorry, I didn't see your question there. Janet Airlines, is a 10-year arm fixed, good or no? 10 years is like not so bad. If it's like a 5-1 arm, I would say no, because we don't know what home prices are going to be like in 5 years. In 10 years, that's a little bit more reasonable. So if you plan to not move for at least 10 years, then that's good. I would say that in 10 years from now, one would assume that home prices are going to be higher than they are today. I'd be more worried if you're looking at like a 5-1 arm. But having said that, a 10-1 arm or 10-year fixed arm is obviously more risky compared to a 30-year fixed. So you kind of have to weigh that risk versus reward. Obviously, a 10-1 arm is going to be a lower rate than a 30-year fixed. So it depends on your goals. Thanks for that. I do my best. I mean, I know like there's a lot of misinformation out there, especially on YouTube. I mean, watching videos where people are stating claims and not supporting that with data just blows my mind. It's horrible. So I try to make these videos based on data that we can rely on, and frequent data too, or I should say timely data. Yeah, I need to do more research on this. A lot of you guys are asking about this. I have not researched it at all. I really appreciate you. Davis Market. I haven't actually sold a house in Davis. Definitely familiar with the market there, but I don't really know any thoughts regarding what's happening right now. All right, I think we wrap this video up, or this live stream up. Really appreciate you guys joining me. I mean, we've been doing this for, I don't even know how long. 2 hours. Oh my gosh. I can't believe we've been doing it for 2 hours. I thought we'd be doing this for like 45 minutes. I appreciate you guys joining me on today's video. You guys are awesome. All your support. Gosh, these comments. Anyways, hope you guys have an awesome day and look forward to seeing you in the next video. I'll be posting as many videos as I can this week. So we'll see you guys soon. Have a great day.